Morning, market chameleons, and soon to appear Dimitri Pargamonic. Sorry for the late start, Dietmar. Some technical issues on my part. I apologize about that.
Good morning.
Let's go right to the disclaimer.
Okay.
So we can get that over with.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
Excellent. So we're going to look at cash flow statements today, I understand. Not that we don't want to jump. I know Rob had questions about earnings, but we're going to prepare a little bit more for the earnings questions, correct?
Yeah, I think then, because I just want to get through with some of these fundamentals, then we'll go into earnings and concentrate on that, especially we have earnings season coming up soon.
I think the banks are the week of the 16th, and that's usually how they say the start of earnings season is about to be upon us. So,
okay, yep. So that we'll probably start that next week. We'll finish up with some of the fundamentals. Start on earnings season next week.
Excellent.
So before we get to the cash flow statement, let's take a look real quick what's going on in the pre-market hours today. And if there are no questions, I'm going to jump to the cash flow statement. So here we got stocks trading in the pre-market hours, most active stocks, biggest percentage gainers, biggest percentage decliners. I'm scrolling down here real quick to see how many made our percentage gainers list. I see 119 on that list, 38 on a percentage decliners list. From that perspective, looks like a more bullish bias at the open. I'm going to take a look at the high market cap stocks, take a peek there. So I'm using this filter market cap, $20 billion or higher. And we got 36 on a percentage gainers list, 4 on a percentage decliners list. So at least from that perspective, looks like a more bullish bias at the open. If there are no questions, Will, I'm just going to go to that cash flow statement. So let me know. But at this point, I'm just going to take a look at, I think we started with Netflix yesterday. So I'm going to continue that as an example. So I'm going to Netflix. This is the Netflix page. Here on the left-hand side, we got a menu with different types of reports. Under the fundamentals, we have cash flow statement. And then I'm bringing it up here. Now, we took a look yesterday at the income statement. So the income statement is really letting us, what we talked about is letting us know, well, how much money are they making? How much profits are they making? What are their expenses like? Where, what are their profit margins like? That's what we went over yesterday. Now, the cash flow statement is telling us something a little bit different. And again, we're getting these from the SEC filings. So every quarter, the companies, they report their financials, then they file it with the SEC. So these are coming from the SEC filings. We have annual and quarterly. And here's a link to the SEC filing over here. If you click on it, I'm just going to show you. These are the annual statements. It'll take you to the SEC. You got the 10Ks here. You click these to open them up, and then you'll see the data inside. Let's come back to this report over here. And up top, we have a few charts, graphical charts. And let me explain to you what these are. So when we took to look at the cash flow statements, we want to know where is the cash coming from. And there are different places where a business's cash can be coming from. So here we have a breakdown, the 3 main places that they could have cash inflows or cash outflows. So the first one is operating cash flow, and that's coming from their normal operating business, right? So Netflix, it's in the business of selling subscriptions for streaming movies. So that's their core business, operating business. and they're receiving cash from that. So these are their operating cash flows. Okay. Then the other one is investment cash flows, right? So they could make investments in other things that is not part of their core business. You know, they could buy somebody's stock and receive dividends. They could, you know, buy they could buy cryptocurrencies. They could buy different things from investments, you know, and there could be cash outflow where they make investments, or cash inflow. They could also make investments, you know, in buildings or any type of investment, even for their core business, but it's not coming directly from their subscriptions. Okay, so you buy a building, you use it, you sell it for profit. That's cash inflow. Okay, so that's from investments. Then financing cash flow. Let's say if you issue bonds, you raise capital, that's cash inflow. If you buy back the bonds and just retire them, that will be cash outflow. You could raise money from selling more stock. It has the effect of diluting the current shareholders, but that could be cash inflow. You stock buybacks, that's cash outflow in finance. Okay, so there are three different major places that we're looking for. Where is the cash coming from? And it's kind of important to know, you know, because in essence, you really want this operating cash flow. You want it to come from your main business, right? That's really where you want it to come from. But if you're not making profits, you might have to raise cash from somewhere else. So here, when we're looking at the ending cash, these are their cash positions year over year. So we see here in Netflix, it keeps climbing. So in the latest, at the end of the year, 2020, they reported that they have $8.2 billion cash on the books. So you can see here that's an increase from the previous year, and so on and so on. And it's important to have cash. You got to pay your expenses, right? So you need cash on the books. I'm going to come down here. We see here these are graphical representations of this data table. So let's just take a look at this data table and see, you know, the actual numbers. So here we have operating cash flow. They received $2.4 billion in cash coming from their operations, right? And here you have a breakdown from continuing operating activities and discontinuing operating activities. So you can have some part of your business that you just discontinue, you made cash from it, but you're no longer in business, you divested from it. So you could have from continuing operating activities and discontinued. So here, $2.4 billion of cash came from their normal operating activities. Investing cash flow, $504 million cash outflow. Again, this could be just they're making certain investments. They made $500 million worth of investments. That's not necessarily a bad thing, because you would think sometime in the future they would be able to make some return on it. So you're making investments today because you believe that you'll get a good return down the road. So these are just telling us where, if they're, net making investments, cash outflow, if they're net selling their investments, receiving cash inflow. Okay, so that's investment cash flow from investments. Then we have financing cash flow. So financing cash flow would be, like we explained, you could be getting it from selling stocks, right? You could receive cash inflow from selling bonds. So if you're selling bonds, like over here, we see, issuing payments of a debt. So if you're selling bonds, that will be debt on the books. You have to repay. You have to pay interest on it, and then you have to pay back that debt. So it's liability, right? Now stock, it'll be a little bit different, because if you issue more stock, it's not a liability. You don't have to buy it back, right? You don't have to pay dividends on the stock, but it has the effect of diluting the shareholders, because if you have X amount of stock out there and then you increase the amount of stock, well, that dilutes it, because now if your net income remains the same, but you have more shares, then you're splitting up that net income amongst more shares, right? So the earnings per share will decrease. So for every share you have, it's like you're entitled to less portion of the net income because it's getting divided by more people. Is that making sense? Hopefully to everybody.
Yeah.
So then we come down here and then we see the net, it's the ending balance. So from here, their ending balance is 8.2 billion. So we could see that increased from the previous year of 5 billion. The change was 3.2 billion. That's the increase. So we see here, this was ending. So the beginning of the period, it was 5 billion, increased by 3.2 billion, net cash 8.2 billion. So that's kind of really quickly a, looking at the cash flow statement. So if there are no questions, we could also just take a look at, I think we have year over year change. So these are the basic values. So we can just kind of click on this, convert it to a percentage statement. And then we could see here, year over year, the percentage changes. So we could see here how the ending cash balance here, it looks like it's increasing since 2017. The last year increased by 63%. So really, that's probably, as much as that's all I have on the cash flow statements. If there are any questions on it, be happy to answer. No questions, Will?
Questions have come across yet about the cash flow statement, D? If something pops up, it is a little bit of a delay.
Okay.
All right. Something just did pop up from Robert. He's asking, so would you conclude that an increase in operating cash flow is positive and a decrease from borrowing is positive? Also seems very logical, is what he's saying.
Right. You still want to take a look at what all the surrounding circumstances are, because sometimes it's not, if you're issuing debt, let's say you are issuing debt to raise capital, but you think that you read what are they planning to do with it. Now, if they're just issuing debt because they need to do that to stay in business because they're not making enough money, I would look at that as a negative, because that's not sustainable. You can't continuously just issue debt to pay your bills but not make profits. But some businesses that's their model. They issue debt because they could borrow at one rate and they could invest it and make a better return. So they'll make a spread on it, right? And I think like pipeline companies do this, real estate companies, obviously, like they're all leveraged finance. So, you kind of want to take a look at, well, what are they doing? Why are they raising money with bonds? Why are they issuing stock? What do they plan to do with it? And that's really in the management discussion, right?
Yeah, well, you've had a company recently, and I may scrabble the name, but I think it's MicroStrategy. Their whole model kind of has shifted away from, they were in the software space to acquiring, I think only Bitcoin, maybe other cryptocurrencies, and they just issued $1 billion in debt for the sole purpose of taking positions in Bitcoin.
Right? Yeah. So when you hear a company doing that, then you got to make a decision. Do you think that's wise? Is that a good investment? Do you agree with that? And if you agree with that, you could invest in that company. If you disagree with it, obviously you think that, well, that's not a real business model, right? That's just buying an asset, holding it, and you're using leverage to buy that asset. So it's kind of up to you then to go in there and figure this out, because you're getting some data here as a starting point. You still want to go in there and research what do they intend to do with this money, and it's not necessarily a warning signal, because like I said, I don't think Netflix is in trouble. They have plenty of cash. They're generating cash, it looks like, from their operating activities. And I think if they really needed cash, they could probably sell their stock, no problem, right now. So they probably looking at it from the perspective of, that they see investment opportunities and interest rates are low right now. They could probably issue that debt and use that money to make certain, whatever opportunities they're seeing. They think that they'll get a good return on that borrowed money. Okay, so that's kind of just looking at the debt part. When you sometimes, there are warning signals when you're seeing these negative. So you're not generating any money from your operating activities, and you're seeing so obviously you need to get money from somewhere to pay your bills, right? If you're not making profits and you have expenses, you need to get the money somewhere. And if you continuously see companies, issuing more and more stock, that could be a warning signal, right? That's not sustainable. Eventually, you're just financing everything by using by using the shareholders. So that would not be sustainable. You could also take a look at their investments, see how much assets they have on the books, because sometimes you could have a lot of assets there on the books, and you might just want to sell them so you'll get some cash from there, so it'll be positive. Or they're making these are letting us know they're making certain investments, right? Because it's negative, so there's cash leaving to make certain investments.
Well, certainly the banks issuing the cash, or the investment companies issuing the debt, they're doing their due diligence, right? They know that if they have to come and go to bankruptcy court to get their money, they know where they are in line, right? So,
if the banks are holding the debt, right? Unless these are like bonds that they're selling to certain, convertible bonds, whatever it is, we don't know who's holding this debt. You could go look up and investigate it further. But yeah, if the banks are holding it,
well, even the companies buying it. Well, I know like MicroStrategy was they sold it, so they were oversubscribed. Like people,
right?
Whatever the thesis is or what they're doing with
what is the symbol for it?
I don't know. I think maybe MSTR. I don't watch the stock. But it seemed amazing to me that they could issue $1 billion to get into a business that it's not their core business, right? It's so far away from their core business. So,
right.
I don't
know.
So
here, this is what it looks like to me. They are generating some money, right, from operating activities, 53 million last year. They did make sizable investments. Here's $1 billion, right, in investments in 2020. Where did it come from? And where did it come from? Looks to me like, issuing debt. A lot of it was from issuing debt. So, like you said, take a look, see what they're trying to do with it, right? You're saying, are they mining Bitcoin, or what are they? Or
that's what I don't know. I would think that they're using their in-house, whatever their technology is. I would think it's got to be more than just straight buying Bitcoin, but I have no idea. I have not done any research on it. But the way it's played in the media is basically they're taking this debt issue and investing it in Bitcoin, which is a broad, could be a broad term. You're right. It could be, they're developing technology around cryptocurrencies. It could be a lot of different things, but
right. Because we see.
So again, you've got someone who's interested in this has to do they're, an in-depth analysis of everything that's going on, because it's all there. You just have to dig for it and understand what's going on with that money.
Right. What's the story behind it?
Yeah.
What's the story behind these numbers? We see the numbers, then you figure out what is the story? What are they doing? What's going on? You have to figure that out. You're just looking at starting points, but you still have to figure out what the real story behind the company is.
Yeah, Robert's always got good questions. He was asking about how that cash flow, how it fits in with the fast cash burn rate report.
Right. So that's a good question too, because if you don't have a lot of cash on the books, right, you want to then combine and see, well, how much, if there's not a lot of cash on the books, and let's say we look at the income statement and you're not making any money, right? So in this, it looks to me like they were making money, right? So they have gross profits, looks like they have net income. So they're making money, but let's assume that you're not, right? Let's assume that, quarter after quarter, you're losing money because your sales are not covering all your expenses. And if you figure out, well, what is my average burn rate, right? So what is on average, month over month, quarter over quarter, how much money am I losing staying in business? Okay. And let's just say, I'm making up a number because this isn't the case here, but if on average you're losing, let's say, $30 million per month, and you don't, as an investor or CEO, we don't see that turning around anytime soon, right? Like if there's no real reason to believe that's turning around anytime soon, that means you got to find that money somewhere, right? You have to it's not coming from the profits. It has to come from somewhere. Do you have enough cash to sustain yourself, and for how long until you turn profitable? So that's this report here, the fast cash burn rate. So if you figure out how much money you're burning per month, not in this case, it isn't burning, they're making, but if you figure out on average, what do you think you're burning per month? Then you look at the cash flow statement and say, okay, well, if I'm losing 30 million bucks per month, and I've reported that I have only $60 million cash on a book, well, that's only 2 months worth, right? You have only 2 months before you run out of money. So you have to get it from somewhere. You have to either you start making money, you start making profits, or you're going to have to issue debt. You're going to either have to issue debt, you're going to have to issue stock, or if you have assets, you'll have to sell assets, which we call it investments, and raise capital that way. So then you start looking, well, are there assets to sell? How much assets that's on the balance sheet, and if not, then, can they raise debt? That might be hard to do if you're not making profits, it might be hard to do. So can you issue stock or preferred shares? So that's the next data to look at. What can you do? So like, for example, let's see, Uber. So you can see in Uber's case, they're right now not getting enough money to cover their expenses from operating cash flow, right? So here we see that's the case here. So they have cash on the books. They have enough cash on the books that they raised from before to cover these expenses, but it's going down, right, from 12 billion to 7.4 billion. So those are like things to look at. Uber might not have an issue raising capital. It's a big brand name. Sure, like a lot of bankers will find the money either through debt, convertible bonds, or they might issue more stock. But those are things to consider, because you can't do it forever. That hopefully makes sense.
Yeah, that's helpful.
Right. And we see they issued, they received money in 2020, almost $1 billion. They issued in debt. They did the same thing in 2019. They issued preferred stock, $247 million worth. So they raised, over $1 billion from financing. They made investments, $2.9 billion worth of investments. And they also lost $2.7 billion just from their normal operating activities. So whatever revenue, their expenses exceeded their revenue in that case.
Hey, Dee, does it show anywhere? Robert's asking, does it show the time to burn out, like how many days?
So on the fast cash burn rate report, it will show. So it shows it as a runway. So over here, for example, Boeing, right now, they've been losing money. So we're comparing it and they're not making money yet. So if we just took Boeing, for example, they have $7.1 billion cash balance. That's what they reported, but they were also burning $1 billion on average per month. So these are rounded. And then you could see that approximately, we believe that there's about 5 months to go before they run out of cash unless they start making money or they receive money from the government or they issue debt, sell assets, so there's other ways to do it. But here we also see that shareholder equity is kind of negative here. So it'll be hard, to raise it that way. So that's here's Uber. We're talking about it. So we estimated, based on what they're reporting, that they're burning around $240 million per month. And we think they have about 6.6 billion in cash left. And that's according to their latest quarterly report, right? So they do have positive shareholder equity, so they can sell assets. They have a good amount of investments, but these are the estimated months left if nothing changes, right? That's based on if this continues, and nothing changes, that's the runway. So it's up to you to kind of go in there and take a look at what's going on. Boeing has a lot of news around it. I don't think they're going to be, if anything, they would get bailed out probably by the government. They might be getting money from the government. They might be getting new orders, but these are just starting points.
It's interesting to see that Carvana there. I mean, I just read an article yesterday. And I don't know if anyone's out there trying to buy a car, but car prices and what they're selling for on lots, car dealers have never seen anything like this. Like people are paying, 5, 10, 15 grand over MSRP. It's booming right now.
Well, where do they buy their cars? Do they buy them?
They're like a used car trader website. They'll pick up your car, buy your car, sell your car. I'm pretty sure they're strictly a secondary market, but I could be wrong. But even those, all the whole car business is, it's a seller's market right now for anyone who it's harder to get the inventory than sell it.
Things may be changing, right? These are based on last reported.
Yeah.
And going forward, things could be changing for them. Right now, it could be, when they report, these numbers could change, right? Because these are based on the historical numbers until they report the next quarter. So maybe they're even guiding, that, hey, we're seeing an uptick in business or whatever. So you should still pay attention to what they're communicating to their shareholders.
Good stuff, Dima. Great job. Thank you.
All right. Thanks everyone for joining. Have a good trading day. Stay safe out there and hope to see you guys tomorrow.
All right, everyone. Thanks. Thumbs up. Always appreciated. Thanks for that shout out, Gene, with the thumbs up. Remember, Chameleons, we have Jake tomorrow at 10 a.m. You'll be getting another email about that. Make sure you register. Dima.